Good afternoon, everyone. Ryan Tonking from the Black Room here. Hope everybody's having a good day today. I wanted to start a series on significant pivots. So this is going to be the first video of a series. I'm not exactly sure how the series is going to go, but I have a pretty good direction of kind of where I want to take it, because this has been a topic that has come up quite a bit in the Black Room, and also has been a huge. I recently, over the maybe about a month ago, maybe it's almost 2 months now, I made one of the largest decisions in my trading career, based around significant pivots. And so I've been, after that change, it's been a lot of not really fine tuning, but adjustment to the change. The change has to do with the way that I manage a trade, and so this has kind of been at the forefront. Significant pivots has been at the forefront of some of the conversations that I've been having recently. All right, so this first video, I'm going to keep it real simple, as best as I can, because significant pivots are pretty simple for me. We're going to go, I have a slide here that I can just show exactly what I use to define a significant pivot. And then we're going to talk about the importance of significant pivots. And then later on, we can look at some examples together, and I'll show you how I break down what a significant pivot is, what it isn't, and we can go through like some examples to kind of get a better grasp of what I'm looking for. And then afterwards, we can hopefully dive into how I use this to change my management, and we can look at some examples of the new management style as well. Okay? Also, I'm probably going to do a video on the Qs as well, the market in general, because I think we're getting some really interesting price action over the last couple of days. So I think I'm going to do a video on that as well. Okay, so hope you guys are having a good day. Let's jump right into this. I'm going to just kind of get a white board here. I'll draw a couple things, and we will get started. I am in one open position that I'm kind of watching, so if I shouldn't be that distracted. And let me just restart my drawing utensil here, because sometimes it freezes when I start to project. Okay, so opening it back up. All right, so we're going to take a look at some trends. All right, and how significant pivots play a role in trends. All right, so I think you guys will be familiar with something like this, right? And I would call this an uptrend. Okay? So we have a series of higher highs, right? 1 high, 2 high, 3, 4 high, 5 highs, and then a series of higher lows. 1, 2, 3, 4, right? So this is a very, very nice uptrend, right? Each time we move higher, we make a new high. When we pull in, we make a higher low. It's very uniform, and when I'm in a trade like this, it's phenomenal. When I'm long in a position like this is really pretty, and it's very comfortable. I know exactly what to do, and we're all kind of familiar with a trend like this, right? Now, unfortunately, most trends don't look like that, okay? Most trends seem to look like this. Right? Something like that. I'm kind of going off the page here. Right? This is probably a picture that I'm a little bit more familiar with. Okay? Now, this could be because of a couple things. I mean, this is kind of an exaggeration, especially in here. But this could be for a couple reasons. One is if you're on a smaller time frame than the trend is taking place, then you're going to get a lot more movement. And Two is depending on the stock that you're in. Sometimes stocks are just inherently more sloppy, especially if they don't have as much liquidity as other stocks. But for the most part, I think a lot of you guys will be familiar with seeing a trend that looks like this. Okay? So my question is, let's say we're in a position, right? And we entered into the position here. My question is, which one of these is important? Is this area important? Is this area important? Is this area important? Right? Or is this area important? Okay? So the reason why I ask this is because my goal is to get out of this position when the trend breaks, right? You guys know I'm a trend trader at heart. And so my goal is to get out of this position when the trend breaks. So how do I know when the trend breaks or when it doesn't? Right? How do I know which one of these price actions, which one of these pivots is significant? Okay? So what we're going to cover is how I determine which one of these is significant and which one isn't. And then once I can determine that, then I know where to place my stop and where to get out of the trade. Okay, so that's kind of what we're gonna look at is, can we, when we're in a trend that looks like this, can we kind of interpret some of these patterns and price action a little bit more clearly and use them to our benefit? All right. All right, so let's see if I can show this slide here. Give me 1 second in the meantime. Okay. See if I can. Why is this messed up now? Give me 1 second. I had this all set. And okay. Should be able to see this slide. Let me make it a little bit bigger here. All right, sorry about all that. I don't know why that got changed in the broadcast software, but okay. So should be able to see criteria of a significant pivot here. All right. Now, the first criteria is the instrument is in a trend. All right. So I'm not looking at defining significant pivots on a stock that's trending sideways. All right, so if a stock is just going like this, not interested. None of these pivots are significant because we're not in a trend. All right, so what establishes a trend? A higher low and a higher high. That's the start of the trend. That's the earliest start of a trend for me. Okay, so the instrument must be in a trend. So we're assuming that the instrument's in an uptrend down here. So we're going to look at solely uptrends. You can just reverse everything for a downtrend, okay? And I use it the same way. So the instrument is in a trend, and once it's in a trend, I can then look for significant pivots. And all of my entries are in a stock that is in a trend. So I never get into a stock that's not in a trend as far as my personal entry patterns, okay? So once the instrument is in a trend, I can then look for significant pivots, okay? So what we're looking for is a pullback off the high that breaks a prior bar's low, all right? So what we're looking for is if these are a series of candles that move up, right, we're looking a pullback which breaks the prior bar's low right here, okay? So this is the start of a pullback, a break of a prior bar's low. Whatever time frame we're on, whether we're on the 2-minute, the 5-minute, the 15-minute, the monthly, it doesn't matter. The pullback for me starts when we break a prior bar's low. All right? So the pullback starts, we're in a trend, right? Because let's say this was like this, right? Wow, this is getting really sloppy, but we're in a trend like this. We create a pivot, higher high, and then we get a pullback here, all right? Now, what we're then looking for is a new high that's made after the pullback. So let's say the stock continues to pull back, and then we make a new high here, all right? So as soon as we make a new high here, the low of the pullback becomes the significant pivot, all right? So let me erase this, clean this up a little bit. So we're looking for a stock that's in a trend. The stock starts to pull back, and then it proceeds higher and makes a new high, okay? So it starts to pull back, proceeds higher, and makes a new high. As soon as this makes a new high, this becomes a significant pivot for me, all right? Now there's one last criteria here. The move from the initial high, which is right here, to the new high, which is here, must consist of 5 or more bars. All right, so what do I mean by that? Well, I mean that if the stock just is in an uptrend, right, we break the prior bar's low, we pull back one more time, and then we continue higher, all right? Well, we'll be in an uptrend, we'll get a pullback off the highs, we'll break the new high, but from this initial high to the current high, there's only 1, 2, 3 bars in this pullback here, okay? So this pivot is only made up of 3 bars off the high. And what I'm saying is I need a stock that's in an uptrend. The pivot must break the prior bar's low. So we'd have 1, 2, 3, 4. And then at the earliest, the 5th bar makes a new high. All right? Well, why do I have this rule in my plan? One is I did a lot of research on how many bars I should use, and I came up as 5 as a minimum because over the sample size of several hundred stocks, that's what was most effective. And also, the mindset behind this is I don't want to make a small pivot out of a 1-2 bar pullback when that's just noise in this initial move, right? So I'm looking for a significant pullback, and how I'm judging the significance of the pullback is were there 5 bars that was made up of it? Because 5 bars on the current trend was enough for me to invite, it was enough to attract new traders into the position and enough time to go by that says that, okay, these are the players in the trade, and that is a significant point here. Okay, so that's why I'm using 5 bars. So we have the initial high, and then from there I start counting 5 bars. So 5 bars is the minimum. Could be 50, right? Stock may not be in a trend still at that point, but 5 bars is the minimum. Okay? All right, so why is it significant only if it makes a new high? All right, so that's point number 3 here. So the reason why it's significant if the stock makes a new high is kind of, well, there's really one reason, but I'll give you, it's kind of twofold. So this is very common, is that we trigger like this and we go like this. This is really common. So once we trigger, this did not make a new high, and it's very easy to take out this low, continue higher, and the stock still be in a trend, right? This is really common. And so if I'm using this as a significant pivot, it's easy to get stopped out of this. All right? So one thing right off the bat is significant pivots are really kind of hindsight. So I'm not using significant pivots necessarily to enter into a position. I'm using them for management of where to get out if the trend fails. All right? So what I do need to wait for is a new high to be created. Well, why is it important that I wait for a new high to be created? Because the buyers that stepped up here didn't have enough conviction to make a new high. However, the buyers that started to step up here did have enough conviction to make a new high. So what I'm looking for is these are the buyers that are important to me because this is the level, these are the buyers that had the level of conviction to make a new high. And so that strengthens this pivot and makes it become a lot more significant. And so what I will not like is if that area gets taken out, then the buyers that had the conviction that showed up to make a new high here, or pay more than what they wanted to, which then moved the stock price up to make a new high, those buyers failed. They didn't show up again. And so since they didn't show up again, this trend that I'm in no longer is intact for me. And so I want to exit the position, right? Wherever I got in. Let's say I got in here, or let's say I got in back here, right? The buyers that have been moving this stock up failed to step in here, and so I want to get out of the position. Okay? So the reason why the new high is important is because it's judging the level of conviction in the buyers. And right here, this move, the level of conviction wasn't very high, and so it's not that significant to me. But if the buyers make a new high with the stock, if the stock makes a new high because of the buyer's conviction level, that area is then significant to me. Okay? So this is how I judge whether or not a pivot is significant or not. So it's really simple. And, I mean, you can almost, well, not almost, you could get a computer to, once you're in a position and you're in an uptrend, you could tell a computer to interpret significant pivots by this if you wanted to. Right? So this kind of really takes the guesswork out of it for me. Now, just the style trader that I am, I am a discretionary trader. I do enter into patterns, and I do use discretion with that. But I do tend to lean significantly, no pun intended, towards more of a systematic approach, right? And I do think that this is part of that this is kind of a systematic approach. There's a couple other variables in my management, but what I wanted was a clear-cut rule of what is a significant pivot and what isn't a significant pivot. Okay? So hopefully this is helpful in just kind of setting the groundwork of what I use specifically to determine if something is a significant pivot or not. Okay? There's going to be much more to come with this, and let me know if you have any questions going forwards. We're going to be talking more about this. I'll do, I don't know, maybe it'd be a 4-part series or something like that, but we'll look at some real examples, but I wanted to really make sure that we set a groundwork foundation of what I'm using to interpret whether or not something is a significant pivot. All right? So let me know if you have any questions about this before we go forwards. And I hope you guys are having a great day. And yeah, we'll talk to you soon. Thanks, everyone.